and IMF getting agreement getting implemented, you will see interest rates starting to decline. You may see interest rates around the 8 to 10% level because the borrowing requirement is slightly lower. There's a stronger search for alternative investment options. So with this, there will be uh, a strong fund flow towards the equity market. So with that, you may start to see some IPOs, M&As coming into play, M&A, especially because there's going to be a business expansions taking place. So it's a relatively good scenario for the market. Now let's go into the scenario 3. We've named this as the super grid highway. So everything is happening in a faster pace. So this is like the dream scenario where everything is sort of on a perfect outlook. You have a sort of a capitalistic president and a capitalistic parliament. You have a very strong acceleration in terms of the implementation of the IMF program, heavy amount of privatizations taking place, a lot of FDI flows coming in. There could be reverse brain drain, and because the programs is implemented and the economy is going on a right path, you can actually reduce taxation as well because the fiscal deficit reduces significantly, and you have a lot of FDI flows coming in. Balance of payments is significantly positive. You're going towards a fully digitalized economy. So this kind of a scenario, we'll see extremely low levels of interest rates. In this scenario, there may be global support also coming in with global interest rates also falling in. So maybe we are looking at interest rates around 6 to 8%, a very strong rise in the equity market, and you will see the majority of the population, especially the investment seeking 25 to 45 population, looking out strongly for the capital market products, high yielding alternative investment products. Lots of IPOs coming in because of heavy amount of business expansions taking place, mergers taking place, acquisitions taking place, overseas expansions taking place. So that's sort of a
Let
scenario.
me interrupt you for a second. There is a viewer from the audience who has mentioned that the slide is not visible.
Let me unshare and reshare again. Right. Okay.
Thank you.
Okay. Right. Yeah. So with this, I will now go into scenario 4, which we've named as the Lankan pothole. This is a very bad scenario, a worst case scenario for us, a weak president and possibly a hung parliament taking place. So no real decisions being taken on a concrete level. Whatever decisions taken being reversed and not implemented possibly. So IMF program quickly falls apart because you don't really have a lot of time to implement these decisions. You have a immediate rise in inflation and currency depreciation at a massive scale, drain happening at a larger scale. So you have no choice but to raise taxes to find government revenue. So this time, what's going to happen? There's going to be a very high demand towards non-liquid assets such as physical assets, such as maybe gold, maybe property. So less demand for financial products and capital market products. So you will see interest rates initially rising to 15 to 20% and then surging further up. You will see lesser demand for fixed income instruments as well as interest rates are going higher and higher, and there is a potential for another domestic debt restructuring. And with this scenario, equity markets are unlikely to perform, and you are likely to see a severe plunge in the equity markets. So those are the four scenarios we've identified. I think in these four scenarios, we've managed to cover all the possible options that could be there in the market. So this is the final slide as we look at what are the potential probabilities that are there in the market. So if you look at scenario one, we think this is a most likely scenario, and we allocate almost 50% of the probability here, which is a scenario where the current status quo goes forward as well. So nothing much changing. We're somehow keeping the IMF program on intact, delayed, but somewhat reforms getting implemented. So things are going on a very slow scale, but reforms are, though delayed, getting implemented. Scenario two, we allocate a 30% probability. That's the second highest probability, where you get a sort of a majority parliament, and so it could be a parliament where like-minded people also come in together and form a parliament. So in such a situation, then the program also can be implemented. When like-minded people come in, so the privatizations, the relevant fiscal reforms can take place. So in such a situation, things will be quite positive. However, super case scenario, we've allocated only a 5% probability, because the chances of this happening is we feel that it's very, very low. And then fourth scenario is also a slightly higher probability. So a 15% probability is what we allocate for the fourth scenario. So if you look analyze all these scenarios, we feel that scenario 1, 2, and 3, either of the scenarios, if either of the scenarios take place, investments into capital markets will still be positive. It could be moderately positive or highly positive, depending on the scenario, but still it will be somewhat positive. So therefore, for these three scenarios, if you take together, there is 50, 30, and 5% altogether, 85% probability taking place and allocated for these three scenarios. And with it, so investments into fixed income and equity capital markets, basically 85% probability tells that it's positive. And then finally, you have a 15% scenario which says that the situation is negative, or you're likely to have negative returns in such a if such a scenario takes place. So that will be only scenario 4, which is the fourth scenario. So with that, that will be the end of my presentation. So we feel that 85% probability there is likelihood that you're likely to get positive returns, attractive returns, if those scenarios take place. Yeah, that's about it. Uh, Thanks a lot. So over to you, Angelo.
Thank you, Dimantha. Dimantha, we have a couple of questions from the audience. I'll pose the first question. I think it's directed to you. Um, how do historical presidential elections in Sri Lanka typically influence stock market trends?
Yeah, sorry. Yeah. Uh, what we've seen in the past is that the run after elections has been very positive, simply because the existing government used to bring down interest rates, hold the currency, and significantly increase government spending in a planned manner, so that that creates a lot of consumer demand in the system, and through that you achieve a lot of growth, though unsustainable. During those couple of years, you have a lot of growth coming into play, so which will convert into corporate earnings, and with that you will see very strong performance in the stock market happening in every election. We've seen this. Uh, However, this election, we are seeing some amount of uncertainty simply because there is a bit of the on the IMF agreement side also, there is delays and uncertainties taking place there. So within an IMF agreement, we are having a change in government. Now, for example, during 2005 is the perfect example where we had a change of unexpected change of government, or a change of government with a very, very low amount of votes, and that is in 2005. And with the change of government, you saw the market reacting negatively. However, it just lasted for a couple of months because the new government that came into power didn't change anything, and kept on the policies in a very similar manner for a duration of time, which created again policy certainty, and the market moved up again. So from 2003 to 2007, despite a change of government, you saw a sizable uptrend taking place. So that's what we've seen over the past, Angelo.
We have another question from the audience. Sudarka has inquired on any thoughts on the. I'm going to repeat the question to you. Any thoughts on the election, like on each individual candidate? The scenarios can be different. Would would like to know your thoughts on the market if a new candidate wins. Example JVP, SJB. Will it slow down the IMF discussions?
So let me take it in this fashion. Whoever comes to power, the IMF agreement has to go on. I mean, some are talking about discussions or changes to the IMF agreement, unlikely to happen. You can't do that because what's stated in the agreement is very basic stuff, right? I mean, what they basically tell you is what the targets that you need to achieve. We really don't need the IMF to tell these targets, because these are almost obvious targets that the government has to achieve, and with or without the IMF, if we achieve these targets, you will have reforms coming in place. You will have economic growth happening in a positive manner. So, in such a situation, so let me give you an example of a target. Now, the IMF has mentioned you have to achieve at least 15% of GDP as government revenue, right? You've been given a timeline to achieve that, right? So this is non-negotiable. Target is non-negotiable. But how you achieve it is up to the government. So the IMF will not care how you, in what way, in what manner the government achieves it, but the target needs to be achieved if you want to come into uh, or achieve or get the next tranche that they have put in place. So whichever government really, it really doesn't matter if you look at what all the potential candidates are telling, you will see, if you listen very carefully, every single candidate is sort of mimicking almost the same thing in terms of what they are trying to do. The broad basing of the taxation is one example. I mean, almost everyone is saying that reducing the current taxation levels and broad basing the taxes. I mean, even the present president has put it into the cabinet to do this kind of thing. So you can see that almost similar levels. Why is it like that? Because it's that's what's there in the IMF agreement. So when you're implementing IMF agreement, whatever the government comes to power, you'll have to go through that. But of course, what will differ is the pace at which you will implement the agreement.
Thank
Yeah.
you, Dimantha. Um, there has been a series of questions asked on certain, because you mapped out and curated a couple of scenarios. A couple of questions come in to explain the snail pace stroll again briefly.
Yes, yes. So
Could you
that
also
since
share the screen? So for
yes, yes. Let me share the screen. Just give me 1 second. Just give me 1 second. Yes. So, snail pace stroll. So this is the most likely scenario that we think can happen. So whatever the president, whoever the president comes to power, this is a possible scenario. So, um, of course, why? Because it's going to be a hung parliament that is likely. If there is anyone not thinking in the same lines as the majority party, so there will be some amount of difference in thinking. Then there is delay, then there is negotiation, then there is delay to get things implemented, right? So unlike when you have like-minded people uh, trying to implement things, so with this, the, the most probable thing is that governance related reforms are likely to get quickly implemented, and that will be, of course, a positive sign, because that is what IMF also wants to do. They mentioned in the last uh, review also that we've met all the targets, but the governance related targets have not been met. But if you look at the last 2, 3 weeks, I think we saw number of acts being passed in parliament. So some amount of that also had been passed, but no point really passing it. You need to practically implement it as a government as well. Uh, yeah. So in this scenario, slow growth. So somewhere either between 2 to 3%, 3 to 4% is something uh, that needs to be done. So as you know, the broad basing of the taxation, if really it doesn't happen, then you need to really find other ways of implementing higher taxes. So that will be possibly some kind of new taxation. So this is what uh, is likely to happen. However, this is not really a bad scenario because, I mean, interest rates below 13% means that there is some amount of investments going into different areas, some amount of GDP growth coming in. So, very similar to what we are currently going through. Slow level of volume growth, even businesses, you will feel that it's economy is progressing, but at a very slow pace. It's about somewhere, let's say, take an average of 3%. I mean, I'm taking 2 to 3% and 3 to 4% averaged out down to the middle level, so which is about 3% GDP growth. So not too high, not too low, but a GDP growth level of a developed country, right? Slow. So that's what we are likely to experience. Yeah,
Driving on that same explanation, there is a question as to the concern of our trying to identify in this scenario. I think you gave a probability of 50% on this scenario. Am I right?
correct,
Right.
correct,
So
correct.
the question is, on if you consider this particular scenario, what sectors of the stock market are most affected, positively or negatively, by the outcomes of a president election, based on this particular snail stroll explanation?
Yeah. So what we have to assume is that in this current status quo that you're saying in the economy is likely to go forward as well. So in such a situation, what have we told at the moment in terms of our expectations? We've been very positive on the banking sector and tourism. So you can see banking, tourism, irrespective of the political stance, you are seeing some amount of improvements happening there. Then, of course, credit growth is slightly picking, but uh, relatively slow, right? However, then on the consumer side, you see some amount of consumer demand coming into play, right? So those are the sectors that we are positive on: banking, tourism, then going into consumer, and then possibly some amount of depending on the export side, maybe apparel sector or things like Haley's that are more export driven companies. So those are the areas that you should be concentrating on. Consumer also, you shouldn't have too much of a hope also. It might be better uh, to invest in consumer companies that also have a somewhat of a story or a exposure into new markets or maybe new overseas markets, right? Um, maybe some things like CCS having exposure to India, maybe HEMAS having exposure to Bangladesh. So things like that.
Thank you, Dimantha. Uh, I'm going to direct a question to Jaliya Wijeratne. Jaliya, how does investor sentiment usually change in the lead up to very particularly this presidential election, unlike the previous? Over to you, Jaliya.
Thank you, Angelo. Good evening, everybody. Of course, due to the current political situation, uh, it's different from the previous elections. This time, I think there's about 30 to 40% of people have not decided, according to the social media and statistics that, what we gather. So therefore, the approach towards the equity market or maybe capital markets, uh, the investor is kind of in the mindset of watch and see policy. So as you can see, currently the market turnover levels have dropped. So the people have, in second mind, thoughts of getting into the markets right now. But nevertheless, I should tell you, but there are people that who's looking to buy at a cheaper prices, where some of the funds, some of the high net worths, if the individuals looking to collect shares in moderately and then keep it in a kind of a long-term investment. On the trading side, of course, people are a little reluctant to get into the market at once. So that is because of the uncertainty that we create with this current political situation.
Thank you, Jali. Dimantha, would you like to kind of expand on that? Or?
Yeah, yes, I will add a bit on that. Exactly, that is exactly correct what Jalia said. So in this kind of a scenario, what happens is since things are a lot more stagnant, also even funds and all may start to look at sort of a bargain hunting scenario. So that's why you saw even probably a week ago or 2 weeks ago, where there was a continuous drastic drop in the market. Suddenly, you have significant buying interest coming into the market, and once the market comes up to a particular level, it stops because the retail sentiment is really not there. So it's the bargain hunters that are there in the market where they're looking to buy at cheaper prices or uh, prices sort of that are maybe unheard of sort of level, because that's the discount that they are looking for the period or that uncertain period that you have to hold it through, right? Yeah. So that's sort of like the discount they are those investors are looking for.
Thank you, Dimantha. So I think we have slightly gone above the scheduled time. We would wrap up proceedings, and if there are any more questions, uh, the chat box will be open until 5:30. So you can drop in your questions. We would answer them via email. And if you require further questions or clarification on the content covered, do not hesitate to write to us on equity at firstcapital.lk or WhatsApp on 070 111 3500. Uh, this concludes episode 1 of our Stock Talk. We would be continuing a series of discussions on topics that are of relevance to the current economic context. Stay tuned for more sessions as we will continue to keep you updated through our communication channels.